Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. Last week, unbelievable when it came to the cash. Maybe that's part of the reason why it's a little on the slow side, or maybe it's because we have a cattle on feed report that comes out on Friday. We're going to find out what's the movers and shakers of this week's market as Brad Kooima joins us. He is with Kooima Kooima Varilek out of Sioux Center, Iowa. We got to go back and rewind, Brad, just a little bit to last week, because unbelievable is how you described it. This cash market is just what our guys needed.
Well, it was unbelievable. You know, it's one thing if you were taking a market from 124 to 129, right? I mean, but we're taking a market from what had been all-time high levels at 192 to 193 level, and then hiking it all the way to, there was a regional that paid 200. I guess basically you'd call the northern top 198, I suppose. Truly amazing. And you know, I hear stories that I believe are true of cattle that got bought on that deal, and they were bought, you know, for like the 4th of July week or whatever. And never mind, we need those cattle on Saturday. I've heard that on a couple of different occasions in Nebraska. So, you know, it's kind of a darned if you do, darned if you don't deal. You know, guys are saying, well, what's wrong with the futures? I mean, you know, even though we are mostly a little higher on the front months, don't they know the cash? And I'm going like, yeah, actually, futures traders, believe it or not, do keep track of what the cash market is. But, you know, the problem with that is, you know, that thing that you and I have talked about before, that a bull market needs to be fed every day, right? You know, and so, you know, the other famous saying is the market will bottom the day the news is the worst, or top the day the news is the best, right? I mean, so, you know, I'm just kind of talking in reality here. You've got, it takes a fair bit of guts to be bullish cattle when they're at the all-time highs. So that's true for a long speculator. That's true for a fund manager. Now, I still believe that we're doing an awful lot of things right here. The futures are still at a big discount. I think guys are super current. And as I've said for months, the supply of cattle in the north is not as big as what everybody said it was going to be in the fourth quarter of last year. And that hasn't changed. So, you know, I'll still go with as the north goes, so goes the market. And I think we're still in really, really nice shape, barring some weird event happening, of course.
So is the South going to trade better than the North this week?
If I had to guess cash, which of course is what I am doing, because if I knew, you know, we wouldn't be doing any of this. Sorry for that interruption. What my expectation, I guess, is the North will be steady firm, you know, 198, maybe to $2. And the South, I think, will be higher, narrowing that spread a little bit. There was just a tiny bit of 190 in the South today in Texas. I wonder if they can't get maybe more like to 191 to 192, narrow that spread a little bit, which would still be either a record or a near record discount to us. But that's kind of what I thought. The North would stay together and the South would try to crawl back a little bit closer.
Well, it definitely has been an interesting market movement. And as we talk about, you brought up the future side of it. And obviously corn, as you and I are talking, is seeing some lower trade numbers. And I think many think, and I've seen a couple commentaries about it too, that, hey, usually when corn's down, feeders are up, but it's definitely not like that today.
No, in fact, we're just barely steady and had a big trading range today on a lot of these feeder months, almost $3.50. And again, I think there's a little bit of worry about that. There might be just a little bit of uncertainty with the cattle and feed report tomorrow. That's maybe keeping some of the trader on the sidelines. I sure don't see any actual feeder cattle sales that are weaker. I mean, not significantly so. You know, so I think the underlying cash feeder trade is still very much alive and well. Watching the videos today too, you know, it sure seems like there's a fair amount of courage out there for cattle for fall delivery as well. So, some days the market just needs to rest, and maybe that's what we're dealing with today. I am encouraged though that the front end of the live cattle are nicely higher though.
So is that part of the reason why there's just this, as you called it earlier, a weird vibe going on in this marketplace right now?
Yeah. So, you're talking to somebody, of course, that you pegged me on what I think fourth quarter this year and first quarter of next year might be, which I'm very optimistic. So I sit here and go like, well, what happened here that they don't dare to buy the back end of the market today? when you've got a contracting supply, we're going to get that July inventory report back. So we're going to hear again just how tight the cow numbers are, how small the calf crop is, etc. A year ago, the back months led the rally because the long speculator, the fund manager, whatever, he wanted to go get himself parked into the back end of the market where the long-term fundamentals look the best. So it's a give and take day to day. It seems like we still have a little trouble, though, with getting the long speculator to participate. I know it's something the CME is looking at. So now that it's like the front month, so you're what, 6 days from expiration. Finally, June cattle are going to rally 6 days until expiration because, guess what? Looks like the cash market is pretty good.
So as we get ready to wrap this up, July is next month, and I see the USDA reinstating that mid-year report.
Yes, good news. There's a lot of organizations, including some of the ones that I'm involved with, that really fought hard, fought back. It's a matter of transparency, Susan. I mean, we get a chance. We should have every right to know what the news is, right? And so, they actually had to have a Senate Ag Committee, the Appropriations Committee, to appropriate the money for it. Can't really stay with a straight face the way they throw money around up in there. But anyway, we do have.
You're a popular guy.
We do have at least that back reinstated. I'm really glad to hear it. There's a number of farm groups that fought hard for it, and it sounds like we got it back.
Well, and so many people rely, like you said, on what those mid-year numbers have to say. So good to know organizations kind of coming together for a common cause.
Absolutely, for sure.
All right. Well, you go make yourself a steak once your cattle guys quit texting and wanting to talk to you, and we will catch up with you next week. But before we do so, how do folks get a hold of you to make that phone ring like that?
All right, kkvtrading.com. That would be a good idea right now, wouldn't it? Or 712-722-0023. I apologize. That's cattle salesman wants to sell me some calves. Imagine that, right?
I know. Hey, it's all part of the business. Thanks for joining us this week, Brad. Of course, a quick reminder, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's this week's Cattle Call on the Rural Radio Network.